Euronext N.V. is a European stock exchange seated in Amsterdam, Brussels, London, Lisbon and Paris. In addition to cash and derivatives markets, the Euronext Group provides listing market data, market solutions, custody and settlement services. Its total product offering includes equities, exchange-traded funds, warrants and certificates, bonds, derivatives, commodities and indices. As of the first quarter of 2014, Euronext was the largest in continental Europe with 1,300 issuers representing a €2.6 trillion market cap. Euronext merged with NYSE Group, Inc. on April 4, 2007 to form NYSE Euronext. On November 13, 2013, Intercontinental Exchange completed acquisition of NYSE Euronext. In June 2014, Euronext completed an initial public offering, making it a standalone company again. History. Creation. Euronext was formed on the 22nd of September 2000 following a merger of the Amsterdam exchanges, Brussels Stock Exchange, and Paris Bourse, in order to take advantage of the harmonization of the financial markets of the European Union. In December 2001, Euronext acquired the shares of the London International Financial Futures and Options Exchange, forming Euronext, LIF. In 2002, the group merged with the Portuguese stock exchange Bolsa de Valores de Lisboa e Porto, renamed Euronext Lisbon. In 2001, Euronext became a listed company itself after completing its initial public offering. Merger with NYSE. Due to apparent moves by Nasdaq to acquire the London Stock Exchange, NYSE Group, owner of the New York Stock Exchange, offered €8 billion in cash and shares for Euronext on the 22nd of May 2006. Outbidding a rival offer for the European stock exchange operator from Deutsche Börse, the German stock market. Contrary to statements that it would not raise its bid, on the 23rd of May 2006, Deutsche Börse unveiled a merger bid for Euronext, valuing the pan-European exchange at €8.6 billion, €600 million over NYSE Group's initial bid. Despite this, NYSE Group and Euronext penned a merger agreement, subject to shareholder vote and regulatory approval. The initial regulatory response by SEC Chief Christopher Cox was positive, with an expected approval by the end of 2007. The new firm, tentatively dubbed NYSE Euronext, would be headquartered in New York City, with European operations and its trading platform run out of Paris. Then NYSE CEO John Thien, who was to head NYSE Euronext, intended to use the combination to form the world's first global stock market, with continuous trading of stocks and derivatives over a 21-hour time span. In addition, the two exchanges hoped to add Borsa Italiana into the grouping. Deutsche Börse dropped out of the bidding for Euronext on 15 November 2006, removing the last major hurdle for the NYSE Euronext transaction. A run-up of NYSE Group's stock price in late 2006 made the offering far more attractive to Euronext shareholders. On 19 December 2006, Euronext shareholders approved the transaction with 98.2% of the vote. Only 1.8% voted in favor of the Deutsche Börse offer. Fr. Jean-François Théodore, the chief executive officer of Euronext, stated that they expected the transaction to close within 3 or 4 months. Some of the regulatory agencies with jurisdiction over the merger had already given approval. NYSE Group shareholders gave their approval on 20 December 2006. The merger was completed on 4 April 2007, forming NYSE Euronext. Attempted merger with Deutsche Börse in 2008 and 2009. Deutsche Börse made 2 unsuccessful attempts to merge with NYSE Euronext. Both attempts did not enter into advanced steps of merger. In 2011, Deutsche Börse and NYSE Euronext confirmed that they were in advanced merger talks. Such a merger would create the largest exchange in history. The deal was approved by shareholders of NYSE Euronext on July 7, 2011, and Deutsche Börse on July 15, 2011, and won the antitrust approved by the U.S. regulators on December 22, 2011. On February 1, 2012, the deal was blocked by European Commission on the grounds that the new company would have resulted in a quasi-monopoly in the area of European financial derivatives traded globally on exchanges. Even if the project was definitely buried after this, Deutsche Börse appealed this decision. In 2012, Euronext announced the creation of Euronext London to offer listing facilities in the UK. As such, Euronext received in June 2014 recognised investment exchange status from Britain's Financial Conduct Authority. Acquisition by Intercontinental Exchange. In December 2012, Intercontinental Exchange announced plans to acquire NYSE Euronext, owner of Euronext, in an $8.2 billion takeover. The deal was approved by the shareholders of NYSE Euronext and Intercontinental Exchange on June 3, 2013. The European Commission had approved the acquisition on 24 June 2013, and on August 15, 2013, the U.S. regulator, SEC, granted approval of the acquisition. European regulators and ministries of finance of the participating countries approved the deal, and on November 13, 2013, the acquisition was completed. The fact that ICE intends to pursue an initial public offering of Euronext in 2014 was always part of the deal and a positive element for European stakeholders. After a complex series of operation within a very limited frame, Euronext became public in June 2014. Listing of Euronext and separation from ICE. On June 20, 2014, Euronext was split from ICE through an initial public offering. In order to stabilize Euronext, a consortium of 11 investors decided to invest in the company. These investors, referred to as referenced shareholders, own 33.36% of Euronext's capital and have a 3-year lock-up period. Euroclear, BNP Paribas Fortis, Société Générale, Caisse des Dépôts, BPI France, ABN AMRO, ASR, Banco Espírito Santo, Banco BPI and Belgian holding public company SFPI. They have 3 board seats. Alternext is a market segment formed in 2005 by Euronext to help small and mid-class companies in the Eurozone seek financing. This initiative was later followed by the creation of Enternext, a subsidiary of Euronext dedicated to promoting and growing the market for SMEs. Enternext was created in 2013 in order to help SMEs outline and apply a strategy that is most suited to support their growth. Enternext is a pan-European program and comprises over 750 SMEs, which are listed on Euronext markets in Europe. Thus, Enternext plays a key role in Euronext's strategy of becoming a leading capital-raising center in Europe. In June 2014, Enternext launched 2 initiatives to boost SME equity research and support the technology sector. Enternext partnered with Morningstar to increase equity research focusing on mid-size companies, especially in the telecommunications, media and technology sector. Cash markets. Euronext combines 4 national markets in Europe, trading stocks of major companies of each country participant, and manages the main national indices representing these stocks: AEX Index, BEL 20, CAC 40 and SI 20. Blue chip traded on Euronext represent 20-plus issuers included in the Euro Stoxx 50 registered sign benchmark. In 2012, Euronext announced it was opening a listings venue in London under Euronext London, which strengthened the competitive position of Euronext in Europe and increased its visibility. Table of major instrument types traded on Euronext cash markets. Derivative market. Euronext has a leading milling wheat contract which is a benchmark for wheat prices in Europe. In June 2014, Euronext signed a Memorandum of Understanding with the Dalian Commodity Exchange. This agreement aims at researching the demand for commodity products in new geographic areas and developing strategies for the distribution and trading of these products in safe and orderly markets. Table of major instrument types traded on Euronext. Derivative markets. Structure and indices. Euronext comprises cash and derivatives markets, which, as of December 2013, cover the following operational markets and segments. Indices. Euronext manages various country, as well as pan-European regional and sector and strategy indices. Main indices managed by Euronext. Agreements and cooperation with other exchanges. Since the acquisition of Euronext by Intercontinental Exchange, information about the status and validity of agreements and cooperations is not available. Euronext provides technology and managed services to third parties. In March 2014, the group signed agreements with 4 new exchanges: the Beirut Stock Exchange, the Amman Stock Exchange, Bourse Tunis and the Muscat Securities Market, for the implementation of its UTP.